Well, good evening, everybody. We got some exciting earnings today. So many earnings, in fact, that I'm going to make 2 entire dedicated live streams covering some of these companies. In this video, we're going to cover Aapl, my Crapple, Amazon, my Slamazon, and Mastercard. That's right. Now, the first one we're going to cover is Mastercard. You want to know why? Because they're the only company so far to have released earnings. We have Aapl and Amazon due at the close of the bell, and those are very exciting companies. So let's dive right into it and see what's going on with Mastercard, my broken shard. So we pull up the stock today. It's up 1% on the day. So I guess we didn't have super exciting earnings today. Now, it looks like Mastercard. Actually, hold on a minute. So it looks like into the close, or at least in the morning, the stock skyrocketed right after earnings. So we went from 558 all the way up to 574. Okay. It looks like the earnings actually went pretty well. Let's see exactly what they're talking about. So I guess it went up in the morning and then gave up all its freaking gains in the afternoon. I'm like, how is it up 1% if it vertical line like that? Yeah, so it popped on the earnings, stayed flat for most of the day, and then right at the end of the day, it freaking sold off. Individual stocks, bro. So we have Mastercard Incorporated second quarter 2025 financial results conference call. Let's make sure we're sharing because I'm paranoid about that. And also keep in mind, I am on hotel Wi-Fi. So if the internet cuts out or the screen goes black, you know what happened. So revenue is up year over year, 17%. Oh my God. Another large U.S. corporation growing revenue at astronomical rates. Their revenue for the most recent quarter, and I apologize for the vacuum outside, hotel, was $8.13 billion compared to $6.96 billion for the same quarter last year, 17% growth. Operating expenses or adjusted operating expenses, I don't know what that means because that's a made-up number, are up 15%, with operating income up 18%. They posted an adjusted operating margin of just shy of 60%. That is some insane profitability, okay? Their adjusted net income was $3.7 billion. So that margin, that net income margin, that's their bottom line profit after all their expenses, is, let's do some boring math here. I know you're not entertained anymore. Math is very painful. A 46.3% bottom line profit margin. They're almost as profitable as my business. But it's easy to be profitable as a YouTuber and a tax preparer. Okay, so net income's up 13% and diluted earnings per share is up 16%. Cooking, baby, cooking. These revenue growth rates from all these freaking companies are insane. So worldwide gross dollar volumes, this is the total volume of transactions that they're basically scraping from, is up 9% worldwide with 6% growth in the United States, but 10% growth in the rest of the world. That's pretty freaking crazy, okay? So shockingly enough, there's a lot of volume that they get from overseas. This is definitely an international company. They actually get most of their dollar volume from overseas. Their dollar volume in the most recent quarter from overseas was 1.8 billion, or is that trillion? Excuse me, 1.8 trillion of volume, versus 813 billion for the United States. Wow. Their total worldwide gross dollar volume, all the swipes and all the money transacted on MasterCards, $2.6 trillion. That's a lot of transactions. Wow. All right, so we got switched transactions and cards. We got 10% growth in switched transactions, and we got 6% growth in cards. What is a Maestro card? Have you ever heard of a Maestro card? So apparently, the vast majority of their revenue transactions come from MasterCards, not shockingly. And then they have these Maestro cards. Never freaking heard of that in my freaking life. Okay, maybe that's like an overseas thing. I don't know. All right, so let's see. Second quarter revenue growth by type. This is called disaggregated. They break it up by type. So in their payment network, their revenue growth for Gap was 13%, and their value-added services and solutions grew at 23%. So they're posting faster growth in their value-added services and solutions. but still impressive growth for both. I mean, 13% payment network growth year over year. That's pretty freaking nuts. I mean, we're going through an explosive time period for corporate revenues and corporate profits. Okay, let's see. Payment network, transaction, cross-border. Okay, boring stuff here. Let's look at adjusted operating expenses. So they have these non-GAAP metrics. Whenever you see non-GAAP, just automatically discount it and go straight to the financial statements. But let's look at their growth in different types of expenses. So their general and admin expenses grew 14% year over year. Advertising grew 15%. Depreciation and amortization grew 25%. But overall, depreciation and amortization is still a tiny fraction. That's the cost of capital expenditures. And they really aren't spending that much on ads. The vast majority of their expenses, obviously, are general and administrative expenses. Employees, et cetera, et cetera. Okay. All right. So this is just a bunch of different metrics for all their volumes. Let's see. Where was most of the growth? Intra-Europe and other cross-border up 15 and 16% respectively. Yeah, most of their growth is now coming from overseas. That's freaking crazy. Wow. Okay, so that's in. Okay, yeah. So Q2 is over here. Intra-Europe grew 17%, other cross-border 13%. Yeah, it's overseas that's driving a lot of revenue growth. All right, looking ahead, further thoughts on 2025. What do we have here? Do we even have like projections? Okay. Non-GAAP reconciliation, 2025 financial outlook, litigation provisions, 5%, high single digits. Restructuring charges, they're projecting 2%. This is a increase of 2% of restructuring charges year over year, and litigation 5% year over year. Let's see, acquisitions. I guess they're projecting smaller acquisitions year over year. I wonder what those litigation provisions are for. I don't really like the format of their freaking slides. Let's see. Yeah, I guess they don't really say much about what's going on in 2025. Interesting. Okay, third quarter 2025 financial outlook. Can we see let's see, net revenue, high end to mid teens. Okay. Operating expenses, low single digits. So they're projecting to grow their revenue at the high end of mid teens. So 16, 17, 18%. But they're only going to grow operating expenses. They're projecting low single digits. Okay, and then they have non-GAAP growth. Ignore that. Okay, so they're projecting next quarter. I mean, still pretty significant revenue growth and not a huge expansion in expenses. So that means more profits. So overall, Mastercard's earnings were extremely good. It seems like most of the revenue growth is coming from overseas. I mean, it's still pretty significant in the United States, but international is definitely driving the growth there, shockingly. And they're still posting insane margins with pretty insane revenue growth, and they're projecting that for the next quarter as well. So I could see why Mastercard vertical lined in the morning and then gave up all of its gains literally today. So it's up 1% after those stellar earnings. I guess it was all priced in. I mean, if you look at valuation metrics, this is a $516 billion company. Oh my God, with a PE ratio of 38 and a forward PE of 33, which doesn't seem that obnoxious, to be honest, because they're growing pretty fast. And analysts have a price target of $614.57 with 8% upside. I wonder if they updated the financials on here. I wish that presentation actually had financials. Oh, they already updated it. Okay, let's see. Let's see what their cash flows, what they did with their cash flows. See how fast stock analysis updates stuff? So their operating cash flow year over year grew 46%. 46% growth in operating cash flow. They spent $2.2 billion buying back stock and $691 million on dividends. And their free cash flow netted out to $4.5 billion for the quarter. 50% growth in free cash flow with a free cash flow margin of 56%. This is a very profitable company. Wow. All right. So, I mean, fantastic earnings by Mastercard, and the guidance seems pretty straightforward. Seems like they're still guiding pretty significant revenue growth. I mean, 40, 50% growth in operating cash flow and free cash flow. I don't know what that is I don't know why you complain about that. All right, let's make sure the stream's still good. It is. All right, now let's move on to Aapl. Aapl, my crapple. Let's see what Apple's doing in the aftermarket. Okay, it's up 0.28%. Did they even drop earnings yet? It's 407. We should have earnings by now. Let's go ahead and refresh Aapl. Not a huge fan of Aapl, to be perfectly honest. I mean, it's one of the largest companies in the world, but I'm not really understanding what's going on here. Okay, so this is their third fiscal quarter results, and they're going to have a conference call at 5 p.m. Eastern, but they should drop the earnings before that. Let's see, SEC filings. Let's see if they actually updated the SEC. Nope. Let's go back to investor relations. Okay. No, it's not updated yet. Yeah, because they only have Q2 here. Yeah. I guess Crapple hasn't updated yet. Let's see one more time. Nope. Okay, let's move on to Amazon. Let's see if Amazon's vertical lining in the aftermarket. Amazon down 2.56%. Oh my God. Oh my God. Let's see what's going on here. Q2 earnings release PDF. All right, July 30th, 2025. Let's see if we can get this zoom properly. Zoom out just a little bit. Okay, so they announced financial results for the quarter ended June 30th, 2025. Net sales increased 13% to $167 billion, compared with $148 billion in the second quarter of 2024. 13% revenue growth for a very large company. Excluding the $1.5 billion favorable impact from year-over-year changes in foreign exchange rates, net sales increased 12%. So they got a little boost of revenue, from foreign exchange. North America segment sales grew 11% to $100 billion. International segment sales increased 16% to $36 billion. Okay. But that was actually boosted by currency exchange rates. So if you excluded changes in foreign currency exchange rates, they only grew international revenues at 11%. And then AWS increased sales 17.5% to $30 billion. Operating income increased to $19.2 billion in the second quarter, compared with $14.7 billion in the second quarter. So their operating income grew by, looks like a lot faster than their revenues. Let's double check here. 19.2 divided by 14.7. Remember, operating income is your profit before interest and taxes. So they grew their operating income at 30.6%. Not bad. North America segment was $7.5 billion, compared with $5.1 billion. So basically 50% growth in operating income for North America. For international, they grew operating income to $1.5 billion from $300 million. So that's like a 5x in operating income for international. For AWS, they only grew operating income roughly 9-10%. Their AWS operating income was $10 billion compared to $3.9 billion in the second quarter of 2024. So the most explosive growth is coming from international because it's coming from nothing, basically. And their North America segment operating income is actually approaching their operating income from AWS. I remember when AWS was like the only thing that was making money for this company. Net income increased to $16.2 billion in the second quarter, 1.68 per diluted share, compared with $13.5 billion in the second quarter. So their diluted earnings per share grew by 1.68 divided by 1.26. So they grew their net income by 33.3%. Operating cash flow increased 12% to $121 billion. And free cash flow decreased to $18.2 billion compared with $53 billion. So I guess they're getting back to making a lot of investments. So when your operating cash flow increases, but your free cash flow massively decreases, they're doing some big time freaking investments. Okay. I mean, that's a huge drop from 53 billion in free cash flow to 18 billion in the trailing 12 months. Wow. All right, let's see if the stock has changed at all. What's going on with the stock, bro? Let me refresh this. Okay, so it's down a little bit in the aftermarket, but it's not like a utter obliteration like we've seen before. All right, let's keep reading the report. Our conviction that AI will change every customer experience is starting to play out as we've expanded Alexa Plus to millions of customers. What is Alexa Plus? I unplugged my Alexa. I don't like that thing freaking listening to me all freaking day. Launched AI models like DeepSkeet that optimize productivity paths for our 1 million robots. Make it easier for software developers to write code with Kiro, our new agentic IDE. Launched Strands to make it easier to build AI agents, and release Bedrock Agent Core to enable agents to operate successfully and scalably. This is basically just like a massive conglomerate at this point. It's like a Japanese company. All right, so let's see. Biggest Prime Day event ever. They canceled the Wheel of Time. Can you believe that? They announced expansion of same-day and next-day delivery to tens of millions of customers in small cities, towns, and rural communities. Expanded selection with brands like Away, Aveda, Marc Jacobs Fragrances, Milk Makeup, or never heard of any of those. And announced a Nike storefront on Amazon.com. Wow. Nike freaking needs it. All right, so they're doing generative AI tools for shopping experience. I don't really use it. Okay, let's see. Increase Project Kuiper's satellite internet fleet in low Earth orbit with 2 successful launches. Okay, we got a satellite internet fleet. Basically, he's trying to compete with Elon Musk. He's going after SpaceX with Blue Origin, and he's going after Starlink with Kuiper. That's capitalism. Can't complain about it. Honestly, I'd probably go with Amazon over Starlink. I'm just going to put that out there. Okay. Announced Prime Video's NBA broadcast team. Oh, they're competing with sports broadcasting now. Drew approximately 2 million viewers per race and youngest audience of a NASCAR broadcast. Okay, they're going after the redneck crowd. Okay, they announced Denis Villeneuve as director of the next James Bond woke film. Aren't they making James Bond a Jaleel now? Okay, announced integration with Roku. Oh, God. Are we pumping Roku now? Which gives advertisers access to largest authenticated Connect TV footprint in the U.S., estimated at 80 million households. All right. Then they're talking about Nova, which is, I guess, some AI translated garbage. All right. Sign new AWS agreements with Pepsi, Airbnb, Peloton, London Stock Exchange, Nissan, GitLab, SAP, Warner Bros., Discovery Sports, 12 Labs, FICO, blah, 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 blah. Announced AI zones in the Kingdom of Saudi Arabia and Korea. What is an AI zone? Are they spending a bunch of CapEx there? Announced multi-billion-dollar investments to expand cloud infrastructure and advance AI innovation in North Carolina, Pennsylvania, and Australia. Okay. So they're doing a lot of stuff. But the big thing I noticed is they had a huge increase in CapEx. Like, holy freaking crap. Okay. Financial guidance. Third quarter 2025 guidance. Net sales are expected to be between 174 billion to 179 billion, or to grow between 10 to 13% compared to the third quarter of 2024. So they're projecting pretty solid revenue growth. Operating income is expected to be between 15.5 billion to 20 billion, compared with 17.4 billion in the third quarter. So they have a wide range of operating income. Their guide, there's a $5 billion variance of what their operating income could be. You know, and for the third quarter of 2024, their operating income was right smack dab in the middle of that number. So I don't even know how you plan off that. All right. Financial statements. I want to see their, okay, here's their statement of cash flows. So for June 30th, 2025, for the 3 months, they spent $32 billion on property, plant, and equipment. They spent $1.7 billion on acquisitions. Let's see what they did with they spent $2.7 billion paying back long-term debt. Am I crazy? I thought they had a dividend. I thought they announced it. Am I smoking crack? Maybe I'm wrong, but I thought they announced a dividend. I don't see any dividends on their statement of cash flows. Usually you'd find dividends on the financing activities. But yeah, they're definitely spending a lot on capital expenditures. So for the last 12 months, Amazon has spent $107 billion on property, plant, and equipment, capital expenditures. That's insane money. Insane money. All right, here's their income statement. So net product sales were $68 billion. Net service sales were $99 billion. Let's see. Any expenses go up a lot? I mean, cost of sales grew, but it seems to be in line. Fulfillment grew a little bit. Technology and infrastructure, they're definitely spending a little bit more as a percentage basis. Sales and marketing up 10%. And they actually cut a little bit of general and admin expenses. All right. Interest income's down a little bit, but that doesn't matter. Interest expenses down a little bit. Not really that crazy. And it looks like they're issuing shares. And that makes sense. I didn't see any share buybacks, and I didn't see any dividends on their statement of cash flows. So their share count has gone up a little bit, and they're definitely use that to spend a lot of money on property, plant, and equipment. All right. Wow. Look at this. Foreign currency translation adjustments, $3.3 billion. Foreign currency, like the dollar for a while was crashing against international currencies. That definitely had an impact on their comprehensive income. Okay, let's see. Okay. Yeah, they had a huge increase in operating income for international. Like that's like a 5x growth in operating income. 50% for North America. AWS only grew operating income 10%, maybe 10, 11%. Wow. Okay. So North America is currently 60% of their revenue. International is 22%, and AWS is 18% of their revenue. So as a percentage of revenue, AWS hasn't moved. It's kind of stayed at 18%. Wowzers. All right, let's keep going. All right, their balance sheet. So they have $78 billion of cash and $22 billion of securities. They have $100 billion of highly liquid cash on their balance sheet. $55 billion of accounts receivable and $34 billion of inventories. Oh, excuse me. I'm reading the wrong column. I apologize. No, they have... I don't like... Okay, that layout kind of annoys me. Usually the newest one's on the left. So for June 30th, 2025, they have $57 billion of cash and $35 billion of marketable securities. So that's still roughly 90-something billion of cash and marketable securities with $57 billion of accounts receivables. Their property, plant, and equipment in 6 months has grown by $45 billion. $45 billion of additional property, plant, and equipment in 6 months. Good Lord. Let's see. Long-term debt. So it dropped from $52 billion down to $50 billion. Other long-term liabilities dropped by about $1 billion. Treasury stock, no change. That means no buybacks. A little bit of stock issuance, a decent amount of stock issuance. Okay. I mean, it's a pretty good quarter. All right. This chart hurts my eyes. We're not even going to look at that. Yeah. This is just more detailed breakdown of their segments. So, I mean, the stock's down a little bit, but nothing freaking crazy. Okay. So they have revenue growth. Looks like the fastest segment of revenue growth was advertising. So they actually made, what is that, 15 billion of revenue from advertising? That's a lot. 15 billion from advertising. 30 billion from third-party sellers who they ripped them off completely. Physical stores grew at 7% to 5.5 billion. Why do they even have physical? Is that Wegmans or whatever that stupid store is? Whole Foods? Only clowns grow there. Online stores revenue 61 billion. AWS 30 billion. Yeah, so their fastest growing revenue is AWS. 15 billion. That's a lot more than I thought they would make from ads, from revenue at least. Okay. So pretty good earnings overall. I mean, they're still posting pretty good revenue growth, but their guide for operating income was very broad. I'll leave it at that. So the stock's down 3.74%. All right, let's see if we can pull up Aapl. Crapple. All right, Apple's up like less than 1%. Let's see if they updated their freaking reports. May have to Google it if it doesn't pop up. Hello? I guess they don't want to release it. Oh, God. I just want to see your earnings. Jeez. All right, let's check their SEC filings again. Maybe they're waiting till 5. I don't freaking know. Let's go to Google. Aapl Q3 earnings. Yeah. They haven't freaking dropped them yet. Do we want to hang out until they freaking drop their earnings? Come on. Maybe they're waiting till 5 o'clock. Yeah, nothing. God, so freaking annoying. All right, I guess we can do some comments while we wait for stupid Apple to drop their earnings. Okay. Don't forget my CPA services. I'm a certified public accountant. Check out the link. There's a variety of services, tax preparation, consulting, bookkeeping, sponsored videos, and I have a free Discord you can join as well. All in that link below. All right, we got Why So Blue Tube. Won't be able to watch this one. I'll be at my wagey job. Have fun with that, bro. Let's see. I'm only answering member comments. I'm sorry. Stu me. You want me to answer your comments? Sign up as a freaking member. Ryu from Wesley Mitchell. Okay. Not many comments today. Very boring of you all. All right. I'm not sure I want to hang out till freaking 5 o'clock to go over Apple's earnings. Maybe I could do a separate video about that, but yeah. Everybody else can drop their freaking earnings right after the bell, but these morons, one of the largest companies in the world, can't freaking drop it. Let's see. Let me go on X and check. Apple. Okay, the only thing I see is a chart of Apple. Somebody bought 3 million worth of Apple calls expiring tomorrow. Was it Jeremy? Here's a post. Day 503 of me asking, why can't Apple report at 4 p.m. like a normal company? Here, we'll go look at X a little bit. These freaking clowns, dude. Largest company in the freaking world. Yeah, they got to take their sweet time dropping earnings. All Apple has to do today is show that Siri is evolving. Wall Street wants a reason to believe again. It's large cap US tech. It'll be just fine. And if Apple plants a real flag in AI, the market will price in years of ecosystem monetization overnight. One sentence from Tim could be all it takes. You know, that's actually a good insight, because when it comes to short-term performance in stock, it's all pumping. I mean, look at Elon Musk. Look at freaking Tesla. It's all promises, and the stock is ballistic. Okay. Let's see if we can go to, what's that freaking Kobisi letter? Usually he's pretty fast at dropping earnings. Okay, nothing new from him. Who else does freaking earnings? I don't know. All right, let's go check again. I'm not going to hang out for much longer. I'm going to do another freaking live stream. That's Amazon. Let's go back and see if we can find Aapl. Aapl Investor Relations. God, they freaking suck. Yep, I'm not waiting for them. We'll go on to the next video. Freaking morons. All right, any last minute comments? Oh, no members have comments. No members have commented. Dang, how unfortunate. All right, thank you for tuning in. Half the comments are trolls and clowns. You're grifting for $4.99. But if I charged $10,000 to buy Tattooed Chef, you'd be gargling my schlong. I know how it works on YouTube. Anyway, check out my CPA services and have a wonderful day.